Hello, and we are back with another episode on the Mortgage and Protection Podcast, this time to cover part 3 of mortgages for the self-employed with 1 year of accounts with Paul from Henchurch Lane. Thank you for joining us again, Paul. Are you ready to answer the rest of the questions that we've got here?
Ready to go. Let's do it.
Okay, let's dive in. So the first question here asks, are there any alternatives to traditional mortgages that may be more suitable for self-employed individuals with 1 year of accounts?
Okay. So yeah, we touched on this question before we
Mm.
started recording and agreed that it's quite a difficult question to answer. So I'll do my best. I'm trying to understand the sort of psyche behind the people that are asking the question online as to what it is they're really trying to get from that. But I think actually, rather than trying to understand that, it's more so giving them the reassurance that there is a misconception around the whole 1 year's worth of accounts, and people think like it's a bad thing or it's a deal breaker, and therefore they would need to source out what they're referring to here, which is alternatives to a traditional mortgage. So 1 year's worth of accounts isn't a deal breaker. There are multiple, or let's say a handful of lenders that would entertain people with that situation. So if you were to do something that was alternative or not traditional, generally speaking, that is likely to come with a more expensive price tag. So don't entertain those things unless you have to. And even if you did have to, I don't really know what those products are and what they look like.
Right, okay.
If you can get a mortgage with your one set of accounts, then you can get it with, a couple of high street lenders, some less, competitive lenders, more specialist lenders. So it can be done. It's more so going to be actually the devil in the detail. What were the one set of accounts? How much were they? What's your situation? Credit, all those sorts of things are going to come into play. So I would say, yeah, there is a misconception around one set of accounts as though it's dirty. It's not. We can secure it and we do it all the time. So have a chat with a broker before you start searching for alternative or non-traditional mortgages.
Okay, well, hopefully that's reassuring there. So thank you for that. Let's move on to this next question. Again, you might have touched on it previously and in previous episodes, but it's a popular one. So, can I use additional sources of income, such as rental income from properties or dividends, when applying for a mortgage as a self employed individual with 1 year of accounts?
Yes. Okay. So you can, generally speaking, if you pay tax on an income, then there's a good chance that it can go towards your mortgage affordability when it comes to applying. And the key really is to declare your income. Okay, so if you've got income from, let's say, a rental property, or you've got income as cash, as long as you're declaring that's HMRC, it can be evidenced, and therefore it can be used in your favour. There's obviously situations where you might have not had the property for enough time to actually submit a set of accounts. So again, it's going to be looked at very similar to being self-employed as a self-employed income. So as long as you've had that property for a year and you've submitted it and they've obviously got a tax bill off the back of it, then we've got evidence to provide to the lender that shows that income, and therefore it's going to go in your favour and increase your affordability. But yes, any income that you've got, whether it be rental, cash, pension income, that can all go towards the affordability and go in your favour.
Right, okay, so that's good news there. Now, let's go to this question. So, is it possible to make overpayments or pay off a mortgage earlier as a self employed individual with 1 year of accounts? So, any differences here?
So product features like the overpayment facility generally are consistent across the board. So despite what type of applicant you are, if that's a feature of the product and you can get that mortgage, then you're going to be able to take advantage of that. So a really common version of an overpayment facility is 10% of the balance each year. And that's above and beyond your normal repayments too. So let's say you had a balance of £200,000, you'd pay your normal repayments each month, but on top of that, you'd be able to overpay £20,000 that year without incurring any further penalties. And it's also worth noting with overpayments that they come directly off of your balance. There's no interest included. So a really good way to pay your mortgage down really quickly. So if you've got the option or the luxury to be able to do that, then it's a really sensible choice.
Right, okay, there we go. So we've got two questions left for our part 3 episode. The next one here asks, can I get a buy-to-let mortgage with 1 year's account? So again, any differences here?
Um, Kind of. So you can get a buy-to-let mortgage, sorry, with one set of accounts. So you can actually get a buy-to-let mortgage without any income at all, in fairness. Not like there's loads of lenders out there that would do it, but you can. So hopefully that kind of answers the question straight away. But
Hmm.
a misconception for buy-to-let mortgages is that people assume their income wouldn't suffice, whether that be not enough or whether or not it's one set of accounts. They think that's going to hamper them from an affordability perspective. But buy-to-let mortgages are actually, the affordability for buy-to-let mortgages is driven by the rental income on that subject property. Um, so it's not as much of a concern as it would be for a residential your income situation. But some lenders will have a minimum income requirement, which is probably why people have that misconception. So a common requirement is something like a minimum income of £25,000 of your personal income before you can get a buy to let. But there are lenders out there with no limits or no requirements for income. So if you've got a buy to let deposit and you're holding off because of your income situation, don't go and speak to a broker and see what your options are right away.
Right, okay. Well, again, hopefully that sounds reassuring there if you are looking into that. Now, just lastly, then, what steps can I take as a self employed individual to increase my chances of securing a mortgage with 1 year of accounts? And how can a mortgage broker help here?
That's a nice long question, isn't it?
Very long question.
So a couple of tips then. So if you're trying to secure a mortgage and you've got one set of accounts, then be meticulous with your record keeping. In one of the biggest problems I'd say that we come across for people in that situation is producing the correct and accurate income evidence when it comes to the application stage. So make sure you've got a good accountant, make sure your bookkeeping is in order, and make sure you're declaring your income correctly. Um, you're not saying that anybody does, but if you under declare your income in a bid potentially to reduce your tax bill, it will hurt you from an affordability perspective when it comes to mortgage time. So you can't really have your cake and eat it. Um, if you're planning, another tip I'd say, if you're planning on going self-employed, um, and you also are likely to need a mortgage. So let's say you're Googling this because you're thinking about going self-employed, but you want to move as quickly as you can following that, then it's easier said than done. But if you can register as self-employed and start that new journey as close to April as possible, then that's going to help you. And the reason for that is just because of the financial year running from April to April. So if you start in April, you've got a good run at the whole year, and you're likely then to have, you'd assume, more profit than if you say started in December and only had 4 or 5 months at that year's worth of accounts before you could submit it. And we see it a lot of the times, people's first year, so they've got one set of accounts, that's fine, but because they started partway through a year, actually the income really isn't enough for them to drive the kind of loan size that they need, and then they have to work a full year again before they could submit the next set of accounts. So if you can, and it's easier said than done, like I say, but if you've got the luxury and the flexibility to be able to start it at a particular time, then try and do it as close to the financial year as possible, to give yourself the best shot of a decent affordability when it comes to that submission. And can a broker help? It absolutely. If you speak to a broker that actually knows a bit about self-employment, a lot of brokers generally will be, let's say, in an estate agency, and they're doing first-time buyers, vanilla purchases, things like that. If you come at them and you're a business owner and you've got a limited company, you've got multiple streams of income, it might not be the right fit. So if that is the situation, I would say you'd understand that the broker that's going to be able to help you is worth their weight in gold.
Okay, so lots of key pointers there. Hopefully, some useful top tips to take away from this part three
Hopefully,
episode. Thank you for that. I'm sure we'll be back with another self-employed episode soon, Paul.
I'm
Got
sure we
lots more
will.
coming up. And you take care.
Thank you very much.